Hello and welcome to ATFX's Fed Preview. My name's Nick Twidale. I'm the Chief Market Analyst. Well, it looks set to be a very busy week for traders, and already we've seen a fair amount of volatility after the first days and a bit of an AI shock for tech stocks overnight. But one of the key factors that's coming up, I think, this week that most investors and traders are looking at is there's a plethora of central bank rate decisions. And of course, one of the key and most important central banks is, of course, the Federal Reserve. The meeting is due to start later today in the New York session and concludes at the end of the Wednesday session, which for us in the Asian markets over here, that the impacts will come through early in the Thursday session. And we are expecting to see some big impacts on markets with the Fed and the message that they get. Now, first and foremost, for the Federal Reserve, we are not expecting, and it's widely expected across the market, we are not expecting to see a change in the underlying rate from the Fed. But where we are looking for some forward guidance and probably to see some moves in the market will come from what we hear in the Fed statement and then in the consequent press conference from Jerome Powell and the rest of the FOMC. So I think some of the key factors that we have to look at as we move forward, two very, very big important factors that we've got. First up, data, and the Fed makes its decisions on data and how the market's moving and what's coming through from the data feeds. The second up, and you can't ignore it, and we can't ignore it, and neither can the Fed, unfortunately for them, the change in the geopolitical or the political situation in the US. We have got Donald Trump into the White House now. We've got the Republicans. They've got the power to do what they want. They had the clean sweep, the red sweep, and we are starting to see moves on the back of it. Now, in all honesty, moves have been fairly ordinary over the last week, and we're expecting probably a little bit more volatility, but we are starting to see those headlines coming out, and they are hitting markets. So we will look at a few different products. We're going to mainly focus on the euro, obviously the biggest trading currency pair in the world, how the Fed will impact that, and gold, which is also one of the bigger products, which has seen massive moves and threatened all-time highs recently. What I'll do is I'll take us over to our charts now. We'll have a look at where the euro is trading, then we'll have a look at gold, and just see how the Fed can influence those and look for those trading opportunities which should come on the back of the Fed and what we see. So here I've just brought you over to our daily euro chart, and generally when we're looking at central banks, we will look at those longer term charts. So the daily is going to give us more of an indicative of where the market will move over the next few days and weeks, rather than where you look at the hourly chart for the sort of the more intraday trades. Now, one of the big things we have to look at, and it's obviously the dollar side of this trade that we're looking at with the euro dollar. Let's have a look at the data. Data has fallen in line with expectations that inflation is coming back with where the Fed wanted it. Now, the Fed's pricing in another two rate cuts in 2025. A lot of the market are leaning closer to one, and that one not even coming out to July 2025. And part of that is because of the other side of the equation we were talking about, which is the geopolitical side of things. What we have to look at is the recent data that we've got. So inflation data came in weaker than expected. Both PPI numbers and CPI numbers slightly weaker than expected. That did lead to a bit of a sell-off in the dollar. We saw US Treasury yields sell off, and that saw this move in the euro, saw this appreciation from, it looked like it was going to head down for our first parity party for a long time, since 2022. But the dollar sell-off has seen a nice move back up to sort of 105-ish, 104, 104.50 at the moment. Must note the euro is slightly lower on the day that we've taken in. Now, as I said, PPI came in under expectations, CPI did, but what we did see was some strong job numbers as well. So there's a little bit of that Goldilocks sort of narrative coming in, where we still have high employment in the US, but inflation is coming under control. That's what everyone would love to see. What we have got is the potential for inflationary pressures from the Trump government. If we do see them continue on with what they're moving in, they're strengthening the borders, that could lead to wage price increases, inflationary measures on that side of things. And what we're really looking for clarity from that Trump government is tariffs and how that's going to affect international trade and whether that sticks into inflation. So that's something we're looking for the Fed to give us an indication on. Now, let's be honest, they're probably going to stick to the party line, looking at data, making decisions on data, but they're also aware that that data could change quite quickly if these political moves get made and we start to see policies. And just came out of the main trading floor here, ATFX Sydney, and saw Donald Trump signing more executive orders. So the more he signs, the more moves we're going to see in the market. So let's have a quick look at these trading opportunities. So dollar bears out there, if we think we're going to see those rate cuts come through too, maybe data starts to fall a little bit harder, we could see a move back up. First resistance level is going to come in around about this level, 107.67. That's the 200-day moving average. And much higher on there, we're going to see resistance coming in around about that 111, just under that 112 level where we topped out a few times back in Q3 2024. For very short-term traders, we'll just be looking at those overnight highs that we saw before, about 105.30-ish. So trading opportunities there for people that want to sell. And obviously, if you're looking to buy the euro on the back of this move, break trades initially above that 105.30, then you're looking above 107.67 for a move back up towards that 112. Trend line resistance coming in just below there now. I think, look, 111.80. Downside, we've got clear support lines here. So the trend line support comes in around about that 102. There you go. 102, 101.88. You probably wouldn't be looking to trade a break until you get that hard break of that low down around 101.76. But a break down there, and that will be down there, will come from dollar buying, probably guidance that we won't see rate cuts from the Fed, that they're going to sit maybe back on the fence, look at data, look at what happens when Trump policies come through. That could see a break to the downside. Now, we are a good 2.5 big figures away from that. I wouldn't expect to see a huge move on the back of this Fed meeting, but it could be the catalyst that starts to see that. Traders looking to buy back short positions will initially get them in around about that 102, 102.20 level. Then if you're looking for a move to the downside, I'd be looking to trade that a break at that 101.76, 75 level for a move back down to a parity party, and then this much longer term trend line all the way down just beneath 97 cents. So that's the euro. Could get a move either side, but we're really going to be waiting to what we hear from the Fed. To be honest, most people aren't expecting to see too much from this meeting, but that's where you could get the real shock, and that's where you could get some real big moves. Now we're going to move over to our gold chart. Keep an eye on that because this has seen some huge moves. Transition nicely over to that gold chart there without a delay on the tech side of things, which normally hits me. So gold, let's have a look at what's been happening in gold. Right, we know from all the way back, February 2024, we've had a huge move higher. This is the all-time high here, 279 or 2790.15. We had a challenge just the other day, high 278, 2785.80. We've had a pullback to around about the just underneath the 270.50 level, but we're still looking clearly in a nice big uptrend. Now, the move that we could get from the Fed is if they do come in slightly more dovish, if they're still pushing for more rate cuts, we could see a very sharp challenge. And especially if in the next couple of days we move back towards these highs, could see a challenge of those highs. It'd take us up to test that all-time high and then even break higher. Obviously, you're going to be looking at 2,800 level, then your 2,850, all the big figures associated with that. What will also, and what has given credence to this move in gold recently, and this is probably a more dominating factor than the dollar side of the equation, has been the uncertainty. And even in the last week or so, we're expecting to get more certainty on tariffs, I should say, from Donald Trump. We actually haven't seen that much certainty from him, and that could see gold accelerate to the top side. A bit more certainty, a bit more dollar strength, expect gold to move back down to these support levels. And on these technicals, this is a very, very good trend line support that comes in around about 26.50 at the moment. Traders will be looking to pick some up there if they're looking for a continuation of this uptrend. Next support comes in all the way down here on the 200-day moving average, just under 25.50, about 25.25 if I'm honest with you. but there are going to be plenty of trading opportunities coming forward. So from the Fed, we're looking to see if they lean to a slightly more hawkish, less dovish stance from them. If we do see that, expect to see the dollar bought, expect to see gold come off. If we see them coming a little bit more dovish, that they do want to go for those two rate cuts in 2025 or even more, or if they're a little bit worried that they need to stimulate the market. And to be honest, last night's moves could be indicative of that change of rhetoric from them. Then expect to see gold challenge those all-time highs and then maybe even break higher. So plenty of trading opportunities with the Fed. It will be a huge thing. I'm expecting the reaction to come more in a longer-term trend than any instant reaction that sees big figures moving. But when me and the rest of the market expecting that, that's when we could get hit by the biggest surprise and we could see those sharp moves. So good luck with your trading out there. If you need anything from us at ATFX, please let us know. Thank you very much.